Hi everyone, welcome back to Corporate Decoder, the place where we decode corporate filings. Today, we're diving into an 8K report from ECOLAB. And trust me, it's not as exciting as it sounds. We're not talking about saving the planet, we're talking about loans. Get ready for another thrilling episode of debt and revolving credit. Alright, let's jump right in. ECOLAB, a company that specializes in cleaning and sanitation products, has just updated its credit agreement. This document called an 8K is something companies file with the Securities and Exchange Commission, or SEC, to let investors know about big changes that could affect their business. In this case, it involves a new loan agreement. ECOLAB has entered into a fourth amended and restated credit agreement. Basically, they've reworked their loan agreement. It's a multi-currency credit agreement. That means it can be used for different currencies and provides for a $2 billion bail and unsecured 5-year revolving credit facility. That's a mouthful. In plain English, ECOLAB now has access to a $2 billion loan that they can borrow, repay, and reborrow over 5 years. The loan matures in March 2030. This agreement is between ECOLAB, the banks providing the money, and Bank of America, which is acting as the administrative agent, and Swingline Bank. Think of Bank of America as the manager of this whole loan process. Why did they do this? Well, it replaced a previous credit facility that was supposed to mature in April 2026. This new agreement extends the maturity date out to March 2030 and changes some of the terms. What will they use this $2 billion for? The filing says for general corporate purposes, including things like buying back company stock, repaying other debt, and making acquisitions. So they could use it for almost anything that benefits the company. Now let's talk about interest rates. This is where it gets a little complex. The interest rate ECOLAB pays depends on the currency they borrow, US dollars. The interest rate is based on either a base rate, which is tied to the Bank of America prime rate, or the federal funds rate plus an additional margin, or they can choose term SOFR, which is another benchmark rate plus a margin. For euros, the interest rate is based on GBP plus a margin. For yen, it's TIBOR plus a margin, and for British pounds, it's overnight SONYI plus a margin. The margin is an extra percentage added on top of these benchmark rates, and it's how the banks make their profit. They can choose the interest period for these loans. The available periods are 1 month, 3 months, and 6 months. There are a couple of smaller parts to this credit facility. There's a $100 million letter of credit subfacility and a $75 million Swingline loan subfacility. Letters of credit are like guarantees, and Swingline loans are short-term loans for quick needs. ECOLAB also has to pay some fees. First, there's a facility fee, which is a percentage of the total loan commitment. That ranges from 0.5% to 0.125%. Then there's a fee on any outstanding letters of credit, which ranges from 0.70% to 1.125%. The exact rates depend on ECOLAB's credit rating, which is a measure of how likely they are to repay the loan. ECOLAB has to meet certain requirements to keep this credit facility. There's a financial covenant. This covenant requires ECOLAB to maintain a minimum interest expense coverage ratio. This ratio measures how easily they can cover their interest payments. The agreement also includes standard conditions, events of default, and other covenants that ECOLAB has to follow. These include restrictions on things like putting lens on assets and taking on too much debt at its subsidiaries. Finally, the filing mentions that the banks providing the loan or their related companies might have other relationships with ECOLAB. This could include providing financial services like cash management, investment banking, and trust services. They would receive customary fees for these services. There's also a note about this being a direct financial obligation, but that's just confirming that ECOLAB now owes this money. If you want all the nitty-gritty details, the full credit agreement is attached as an exhibit to this filing. So what does all this mean? ECOLAB has essentially refinanced and extended its credit line. This gives them continued access to a large amount of money for various purposes. Now let's step back and look at the bigger picture. ECOLAB is a large established company in a fairly stable industry. They provide essential cleaning and sanitation products to businesses around the world. They're not a high-growth tech startup, but they're a reliable player. The fact that they were able to secure this $2 billion credit facility on favorable terms suggests that banks view them as a credit-worthy borrower. Banks wouldn't lend that much money unless they were confident that ECOLAB could repay it. Extending the maturity date gives ECOLAB more financial flexibility. They now have more time to use the funds and repay the debt. However, taking on debt always carries risks. If ECOLAB's business slows down, they might have trouble making their interest payments. And if interest rates rise, their borrowing costs could increase. The buybacks of the company's stocks with this revolving credit line could cause problems with the company's rating if the company's performance is not optimal. Overall, this credit agreement seems like a pretty standard move for a company like ECOLAB. It gives them access to capital and flexibility, but it also adds to their debt load. So is this good or bad for ECOLAB? It's probably neutral to slightly positive. It's not a game-changing event, but it's a sign that ECOLAB is managing its finances responsibly and planning for the future. Thanks for tuning in to Corporate Decoder. If you found this video helpful, please like, comment, and subscribe for more deep dives into the world of corporate filings. Let us know in the comments which company you want us to decode next.